A $7 trillion race is happening right now, and you can profit from it massively. And it's not just about AI models, ChatGPT, Grok, Gemini, all that kind of stuff. You see, there's one critical piece of infrastructure in the background. Data centers, baby, the unseen backbone powering the entire AI gold rush right now. While everyone debates which AI model is going to win, a quiet group of companies is already getting rich from them. Stick around because we're about to explore the beta play for the next trillion-dollar opportunity in the markets. The infrastructure that makes the AI revolution possible in the first place. But let's just take a quick step back. What the heck's a data center anyway, man? Data centers are the industrial guts of the digital economy. Physical facilities that house servers, storage, networking, and of course, cooling power systems that keep everything actually running, because running all that computer software and hardware uses up a lot of energy and shit gets hot, okay? This is basically the brain and nervous system of the AIs that we use every day. And the investment going into AI data centers right now is astronomically big. And though the idea sounds very modern and cool, data centers actually date back to the 1940s. The US military's Electronic Numerical Integrator and Computer, or ENIAC, completed in 1945, and an early example of a data center that required dedicated space to house its massive computer machines. Commercial internet data centers, they started growing rapidly in the 1990s with the rise of the internet, of course, and the rise of private hosting demand. The 2000s Web 2.0 era and cloud computing triggered massive hyperscale expansion and huge efficiency boosts. In 2006, Google launched the first hyperscale data center in Dalles, Oregon. This hyperscale facility currently occupies 1.3 million square feet of space and employs a staff of approximately 200 data center operators. By the 2010s, growth kind of plateaued as visualization and improved hardware utilization started to actually match the demand. Shifting focus then to optimization and to new technologies, things like edge computing, continually upgrading to the new thinner chips and all that kind of stuff. Then AI came along. The ChatGPT moment, AI has relit the fuse. A McKinsey report calculated the world will need roughly $6.7 trillion of data center investment just by 2030 to keep up with the compute demand. And about $5.2 trillion of that is specifically for AI grade capacity. A huge opportunity. Obviously, the energy demands have to keep up with that too. We need more energy. We need more nuclear. Energy stocks will probably be a great play here too. Now, the AI crypto narrative has not been the best recently. For those who timed it right, those AI agents and tokens probably gave you some pretty good gains. But honestly, most of those went to zero. Most of them are probably never coming back. Even the big sort of AI plays have been struggling big time. But over in the stock world, AI has continued to be super hot. What do? Well, let's rewind to 1848. During the California gold rush, it became clear that there was a better way of raking in profits besides going out and sitting around in a river all day trying to find little nuggets of gold. Many people who rushed to find gold failed, while entrepreneurs like Samuel Brennan and Levi Strauss made fortunes by selling them the essentials, the shovels, and of course, durable work pants. This isn't financial advice, that's not what we do around here, but instead of chasing the next ChatGPT, Grok, or AI 16Z Eliza, maybe it's time to look at data centers, because none of those AI models can even function without them. So let's start with one of the biggest names in the data center space, and that's Equinix. This is a data center titan that trades under the ticker EQIX. Equinix isn't a chip maker, it's not training any models, it's not selling GPUs. No, it's much simpler. It's the digital landlord, the world's largest operator of data centers with over 270 facilities located strategically in 76 major metropolitan areas and over 10,000 customers. It also has a 99.99% uptime, which frankly surpasses a lot of blockchains out there. Not gonna mention any names. If you've ever streamed Netflix, traded Bitcoin, or used Facebook, chances are your data touched an Equinix server at some point. Now, here's the things that are pretty spicy. According to Equinix's latest filings, its revenue has grown for 88 straight quarters. That's over 2 decades of literal non-stop growth. Even during the 2008 global financial crisis, it stayed profitable, and investors are starting to notice. The stock has a price-to-earnings ratio of around 80. That means that investors are willing to pay $80 for every $1 of the company's annual earnings per share, which is pretty big, okay? It also does pay an annual dividend yield of around 2.3%, which might sound pretty modest compared to, I don't know, staking your Avalanche or Cardano tokens, but hey, at least you're investing in something real here. But you're essentially getting paid while enjoying the long-term capital gains that could come in here for Equinix as the data center narrative continues to grow. All while, of course, holding an actual stake in the future of infrastructure and AI, because owning stocks means you actually own something, unlike owning tokens, right? And we always say that we should follow the money, and guess who are Equinix's biggest shareholders? Vanguard and BlackRock. Yeah, they own most of the stuff anyway, but still worth pointing out. Now, before we get into the next part of the equation here and the next big stock I'd like to highlight, guys, if you are trading these cryptocurrency markets, which I know a lot of you will be, everyone's in stocks or also in crypto, well, guess what? You need a good exchange to do that on. That place is called BitUnix, where I'm doing a lot of my trading personally. If you'd like to join me trading over there, never been a better time to get signed up. There's a link right down below here where you can start today. And when you do, of course, available to anyone, anywhere, that means you, no KYC, no VPN. When you do sign up, you can get up to $700 in deposit bonuses. You deposit $2,000, you get $400 back. Deposit $10,000, you get $700 back. Crazy deal. Great trading bonuses, and we're gonna make $1,000 in every live stream. You can be one of those winners. Link down below. Next up is the digital realty with the ticker DLR. By the way, these are just examples. I'm not telling you to run out and buy these stocks by any means here. You still need to go and do your own research on any of this kind of stuff. Now, if Equinix is the premium landlord of the AI world, digital realty is the global backbone quietly matching its scale. The company operates 300 plus data centers across 50 major metropolitan areas, serving over 5,000 customers, including giants like IBM, Meta, and Oracle. And with more than a decade of 99.99% uptime, it's earned a reputation as one of the most reliable partners on the planet. Where Equinix dominates high-density interconnection hubs, digital realty focuses on sheer capacity and power, renting out the kind of energy-hungry facilities that modern AI models demand. Now, here's what investors love. DLR has a price-to-earnings ratio of around 45, roughly half that of Equinix, while also offering a dividend yield of around 2.8%, which is not going to break the bank by any means, but it's not bad considering the PE, meaning it doesn't carry a euphoric valuation like Equinix does right now, but it does offer slightly higher payouts to investors. Look, at the end of the day, the institutional titans are betting big on data centers. Now, to be fair, the recent AWS outage reminded us why over-centralization can be risky. When one cloud provider hiccups, half the internet freezes. That's why we shouldn't completely fade decentralized models like BitTensor, which spreads AI compute across independent nodes. But that hasn't caught a lot of narrative or attention recently. Doesn't mean it can't in the future. It's still early, but it hints at where the next evolution of infrastructure could go. I think there is a decentralized future for a lot of these services, and that decentralized providers like BitTensor do have a place here. But that's not the topic of today's video. While data centers are quietly collecting rent, someone still has to build the machines inside of them. So enter the chip makers here. The picks and shovels of the AI gold rush. NVIDIA, obviously, doesn't need any introduction. It's the big headline grabber. Once known for producing GPUs for games, is now the poster child for AI after pumping more than 1,000%. We're literally better off buying and holding NVIDIA versus Bitcoin the last few years, man. Stock trades at a PE ratio of around 52, and it's literally the biggest stock on the planet with about a $4.5 trillion market cap, holding up the entire global economy essentially at this point. Man, investors are betting on a near monopoly for it in AI compute. Dividends are tiny in comparison to other stocks because it chooses to fund growth and give value back to investors via buybacks. The drawback is that NVIDIA is also a casualty of the trade war between China and the USA. Now, NVIDIA might be the biggest digital shovel maker, but it is not alone. Enter Broadcom, listed under the ticker AVGO. Well, NVIDIA, of course, always gets the spotlight. Broadcom is out here building the networking silicon that makes massive AI data centers even possible in the first place. Its chips connect the GPUs, handle data movement, and keep hyperscale clouds like Amazon, Google, and Meta actually running smoothly. In short, NVIDIA makes the brains. Broadcom builds the nervous system. It's not as sexy. Brains are way sexier. Still interesting though. Now, AVGO's PE is in the 80s and pays a 0.68% dividend yield, which is not very much, but it has a small dividend yield because its stock price has increased much faster than its dividend payments. Now, these two are just examples. There's others like Intel, TSMC, and AMD, which all have their own interesting value propositions. So I'll leave it up to you if you're interested in that topic to go and dive deeper. It's just a matter of choosing which one works best on your risk profile and your expectations. But even the smartest chips can't compute without energy and raw materials, and that's where the next layer of opportunity lies in the future of the AI infrastructure world. An S&P Global report estimates that data centers' grid-based power demand will increase by 22% by the end of 2025 and will triple by 2030. Well, another report says that data centers will drive 2% of copper and 3% of rare earth demand within the next 5 years. Significant. So don't sleep on power producers and don't sleep on miners either, okay? And by the way, if you are a crypto investor and you're still trying to figure out whether you should get into stocks, whether crypto is the big play, where the opportunities lie in both of them, you should subscribe to our free newsletter. Link down below. We're releasing stock alpha, all kinds of stuff. We just did a great report on Galaxy Digital. You should go check it out. Link down below. So everyone's out there busy chasing the next AI token or model stock. The real opportunity may lie beneath the surface in the pipes, power, and processors that make AI even possible. So whether it's data landlords or the chip makers or the power suppliers fueling them all, the entire ecosystem is quietly building the foundation of the next trillion-dollar economic boom. Because at the end of the day, the biggest fortunes in history were not made by chasing the hype, but by owning the infrastructure that made the hype possible. It happened during the California gold rush, it happened during the railroads, and it's happening again today.
It is happening again.
Only this time, of course, it's all digital. And while I have no plans to, swap out my Bitcoin stack for some of this stuff, since I still believe that is the future of money and Bitcoin's a very unique asset, I have been diversifying more and more into stocks. Bought a lot more stocks earlier this year to add to my positions, gonna keep buying more stocks. I'll keep making a bet on making a fortune by investing in the future. Thanks for watching.